right, so this is Red Ben. We are doing something a little bit different today. I've built a spreadsheet that I'm sharing with my team members. If you're already in the Trade and Perform room, you'll find a link that will bring you to either the NQ or the ES spreadsheet. What you're going to do right away is you're going to make a copy of it. You're going to save a copy. So go File, and then make a copy, and then make sure you're saving it in your own Google Drive, or you can save it as you can export it as a spreadsheet in Excel, and it should work there as well if you have Excel. I use the Google spreadsheet; it's free. You just need a Google. You need a Gmail account basically to access this. I believe you should have access to be able to edit it. If you don't, let me know and I will fix it, but it should be editable for everybody. And like I said, because of that, because everybody in the team can edit this document, what I'm recommending people do right away is to make a copy of it before you start putting in the trades. And that way it won't interfere with the main copy. If you accidentally delete something and you don't know how to fix it, you can just go back and make a new copy of this, right? So that's the other nice thing is all of the functions are already saved here. But if you accidentally break the one on my cloud, that's okay. I have a backup copy. You just have to let me know because I'm using my own copy. So I won't notice if this one's broken. So if you try to come on here, something's not working, tell me and I will upload. I'll just assume that someone probably deleted something or moved something, and I'll just upload the copy, right? So I've got it originally copied. Don't worry about it. But like I said, if you want to use it, just go File, make a copy, and then save it in your own Google Drive. So how does this work? What we're going to do, it's really straightforward. It actually only takes about maybe 2 minutes to put in a couple trades. I'm going to quickly explain what all of these columns and rows are, and then we're going to go through the trades. So here you've got month, day, and year, right? So this is just for the day. Simon had asked that I make this useful for testing individual setups. So the idea here is rather than putting in every trade you're taking, we're going to pick one setup type, such as the Apex traps, or if you trade 2-bar combos, let's say, you would make a copy of this, right? And you'd change an additional copy, and you'd change the title to 2-bar combos, or maybe you want to specifically look at a new setup, or maybe just the DVP setup or the Supernova setup. You would just make a copy and change the title, right? And then that way, what we can actually do is go through either a single day or a week or a month and mark down every time that specific trade sets up. And then at the end, we will have a win rate and like the R's and all of that potential. So potential profit if you traded it on process. If you want to use this as just a log, it'll obviously still work. But the way it's built is to separate them by trade setups, because what I've found personally is that while I could identify the trade setups pretty quickly, I have struggled with having confidence to take them all because I don't know which ones are going to work and which ones aren't, right? And that's just the way it goes. Nobody knows which trades are going to work and which ones aren't going to work. But when I have the data day after day after day, and I see that consistently the majority of the trades are working and the potential is out there to take advantage of that, it helps me take every trade. So anyway, that's how this is built. So I'm specifically calling this one the long only Apex traps. But if you want to copy this and you're working on your own, new setup or whatever, you can, once it's your own copy, you can make as many copies of that as you want and change the title, and that way you can organize it however you'd like. So USD per contract. Oh, first of all, tick chart. This is just to say which tick chart you were using when you found the setup. That way you can go back and find it again. USD per contract, you're going to have to enter this on your own. So the reason why I've split up NQ and ES is because the USD per contract is different. So when it comes to calculating your expectancies and stuff, it's much easier to separate them rather than having to go in here and change every ES trade to a 50. If you want to do that, you can. But since the way I always do it is I start at the beginning of the day and go to the end of the day in NQ, and then if I had a trade in ES, I would go, or if I was doing ES, I would start over with ES. I wouldn't probably be jumping back one and then the other anyway, so I just separated them. But if you wanted to do all NQ here and then all ES down here, you'd have to remember to put 50 down here for your ES trades, right? So that's how you use it is up to you. This is the time that the trade was triggered, and I'm taking that straight from the algo. And then this is the session, right? And so I've already got a drop down on here of New York day session, so that's like regular trading hours. And then I've separated Asia and Europe because I know quite a few of us trade one or the other, but not necessarily both. And it might be helpful if you are trading both to see if you have the same results in Asia as in Europe. Because if I had to guess, I would say Europe is much better. But that's, like I said, wouldn't know that until you actually collected the data. Then I've got pre-market New York. I know that a lot of people trade like the couple hours before the market opens, and that's a little bit different than like London Open. It's still technically Europe, but I've just got it there in case someone doesn't trade Europe, but sometimes they trade pre-market and regular trading hours, for instance. They can organize it that way. Otherwise, if you trade across sessions, like if you held a order over on open, you might want to know that too, right? Like let's say the trade triggered at 8:25 and you want to mark it down because it was a trade that you usually would take, but you also want to have that reference that it technically you'd have to get into the trade before the market opens. That's why that's there. Now you can change any of these with the drop downs. You just have to go to let's see, it is data, and then you go to data validation, and you can add or subtract to that list. So anything with the list, if you want to change it, you can on your own copy. Number of contracts is just the number of contracts that you're trading. Oh, by the way, if you're trading micros, you're gonna have to change this to a 2 rather than a 20, right? Because otherwise it's gonna give you the amount that you'd be making if you were trading NQ. So if you're trading micros, MNQ, and you're trading like 8 contracts or 6 contracts, something, you have to put a 2 here and then put whatever contracts you're making here. So you don't have to have a whole new spreadsheet, but just be aware that that's gonna be different, right? Because otherwise you're gonna get like astronomical numbers compared to what you're used to. So you can put any number you want in the contracts. I think most of us are trading like 1, 2, or 3. If you're trading a ton of contracts, you may be using a more advanced exit strategy. And if that's the case, you would probably need a couple more columns if you're trying to work that out. But we're going to talk about the 3 different columns for exit strategies that I have here just to help us better understand and really start to believe, I guess, is really what it is, that if we leave our trades going, that they do pay us. Because like I said, that's what I've personally struggled with, is just holding on to those trades that I know should work, but I don't have the confidence because I haven't seen the numbers. But they're here. It's just a matter of collecting them. So here you can pick long or short, and if it's short, it turns red, and it changes the arithmetic, of course. So we're gonna leave it long. If you don't do long only, if you do long and short, maybe you change this to long short. So like I said, whatever you call the title is whatever you want. The entry is just the entry. You enter that. So for instance, on this one, this NQ long happened at 8:37. So I would go to 8:37 and we would find a trap. If I use the chart value, you can see that the trap itself was off of this apex, but the entry is when this bar closes. Okay, so I'm getting the entry as 1 tick above where this bar closes, because once the bar closes, that's when the trade is actually valid, and so I can enter anytime after that. So I'm just like default, I'm taking it as high as I could take it, which is one tick above it. Technically, if I wanted to add lower, I might have a lower average, right? So if you want to track what you actually did rather than like what the market would have offered you had you taken every one, if instead you use it as a tracking system, you would just put in your average. But here, like I said, I'm doing this to not necessarily just to put in the orders that I personally made, but what the market offered me, that maybe some of them I took and some of them I didn't, or maybe some of them I took but I didn't trade out optimally. So I'm just going to the top of this bar and taking one tick above that for the entry. For the stop on NQ, I'm going to the low of this entry bar, right, which in this case is 66, let's say, I believe, and I'm going 1 point or 4 ticks below that. So you'll see on the, let's see here. So on this first one, 65 is my stop and 81.50. So I might have just been a little bit higher there. 81.50. Oh yeah, that's about right. It's 1 tick above the entry. Now for the next column, what we have is the immediate extension. So how you view this is kind of up to you. The way I see it is if I were to hold this trade for as long as would be reasonable, right? Not to the end of the day from the morning or whatever, but in a time where I wouldn't have, it might roll back on me, but it's not it might go through my entry, but it won't go through my stop, right? So my entry, like I said, is here, and my stop is here, right? So you can see that while it did come back, it hit my initial 10-point target, and then it pulled back through my entry, but it did not stop me out, and it continued higher. So I'm going to go to the right and see where that impulse kind of ended, and I'd say it's right there. It was the maximum favorable excursion that I could have gotten, right? The immediately is when I say immediate, I mean like without having to take any additional trades or wait all day or anything like that. It's just where it's headed before it turns around, right? If you want to use a specific rule for time, for instance, like if your only time in trade has to be 20 minutes or less or whatever, then maybe your maximum favorable excursion is here, right? But for me, I'm just visually seeing where that like wave went to. And so here I use this, and I said technically the maximum favorable excursion should have been like 35.25 if I measured that correctly. Yeah, 35.25, right? So USD per point, anything gray, and this reminds you right here, boxes with gray, red, or green are calculated. You don't want to type anything in the gray, red, or green boxes. It's already calculated for you. So once you put in your contracts and the USD per contract, it'll tell you what your USD per point fluctuation is. And so this will change based on your contract, see? So if you have one contract, it's $20. If you have 3 contracts, it's $60. So I just put them all at 2 because that's what I trade. Your risk is also calculated by taking your entry minus your stop, and that's the amount, that's in points, not ticks. Okay, so that's, you can see that our average on NQ, our average stop or average risk is right around 16 points. And then now I need to change this. These should be white. These are, I will change this, but these should be white. The target, you technically can put whatever you want. This is not calculated. This actually should be a white background. I just made a mistake. So most of us are taking our first target at 10 points. Some of you might want to do 12. Some might want to do 8. It might be interesting to see how your metrics would change if you went to 8, for instance. So like, let's see my total like maximum here. If I took one off at the target 1 and left the rest to MFE, my maximum is 5,960. And so let's see what happens if I change that to 8. We just make it 1 to 8. We copy all. We go over all the rest and Control V, and you can see that it goes down, right? And then if I took all at T1, I'd make significantly less taking all at 8. And so you can play with that and see like what the optimal number might have been that day, and that you may find that changes based on market conditions. So that is something you have to enter in, but it's probably going to stay at 10. The MFE is calculated, so that is taking your entry, or the immediate extension that you put in minus your entry is giving you your MFE. So when it says MFE up here, it's based on whatever you put in for immediate extension. So like I said, if you want to change the parameters for that, you change it here. You don't really need to change it here. So then these 3 columns are all calculated, and there are 3 different exit strategies. The first one would be either you stop out or you take everything out at whatever your target 1 is. So in other words, my maximum favorable excursion here is always going to be 10 points. So the max that I can get is that I can earn would be $400. Whereas if I got a stop, if it was a big stop, like the biggest I've ever seen are usually 17 or 17 and a half. The biggest I could lose possibly would be $700 on one trade. So that's one strategy, right? Then another strategy would be to somehow hold all of your contracts until the very last tick of this immediate extension. So is this a reasonable goal? Not realistic, right? But it's very important to know, because if you're nowhere near this ever, it probably means you're leaving money on the table. And you may want to consider evaluating your exit criteria, because there was a point where had you gotten to that point that you were in that trade and that money was available, right? It's just a question of whether or not you want to risk a full contract coming all the way back on you after it's gone 10 points. But it's a good number to sort of keep an eye on, just to see if on your really good trades, if you're getting like anywhere near this number, it's a good sign, right? So if you have like an average here of what you usually get if you just hold on to all your trades, or maybe note your minimum, right? Like if I held on to every single trade that didn't stop, I got $550 or more. Wow, that's over my 10 points. Maybe I'm taking profits too early, right? I wouldn't have seen that without having this out like this, right? Like having it in a spreadsheet makes it a little more clear. And then I also see right here that there was clearly a trade that paid huge with 114.75 MFE points of MFE, right? And so if you miss that trade, the difference in your day is pretty huge. And then this strategy is a strategy, a more realistic strategy, where you are taking one contract off at your target, so 10 points, and then all the rest of your contracts you're going to leave as runners, and so therefore the maximum possible profit for those remainders is whatever your immediate extension was, your MFE. Again, is this a realistic number? Probably not exactly. You're not going to hold that runner to the exact tick of the MFE, but like I said, for evaluation purposes, it is helpful, because if you're never getting anywhere near these numbers, you're not holding your runners long enough. So what I see right away here is, for instance, down here, with this strategy, the runners that paid the least when they didn't stop out paid only $75 more than the exit at T1, right? So that difference, it was barely any difference on that trade between those two strategies, right? So that trade wouldn't have really made a difference, but look at how many would make a big difference, right? Like this one goes from 400 to 1670. This one goes from 400 to 2495. This one goes 400 to 1275. And then the other thing I noticed that's interesting is every single one of these that stopped also stopped here, right? So that's interesting as well. That you have to remember that your stops are the trades you don't take, you never get your MFE. The possibility of the MFE being achieved if you don't take the trade is 0, right? The possibility of getting stopped if you don't take the trade is also 0. But if you look like on a day like today where it felt like it was kind of a tricky price action and had a lot of questionable trades whether or not I wanted to take them or not. Had I just stayed on process and taken every single trade, I would have had a killer day, right? Even if I just took all at 10 points, I'm making 870 with a 60% win rate. Not the highest win rate I've seen. I've demonstrated that I personally have gotten win rates significantly higher than that, but it's still good. It's good enough, And you can see that if it's based on your risk, right? It'll take the average of this, and it's going to tell you how many R's you could have achieved based on your risk, just to keep an eye on whether or not your risk reward and your win loss ratio is staying in. If it's profitable, right? It's important that these numbers are strong on a regular basis. You're going to have days where they're weak, but usually they should be pretty good. We shouldn't be having days where we only have an opportunity to 3x our risk, right? Because then on those days, if you also have 3 stops, well, then you've got a 1-to-1 risk reward ratio, and you're not doing so hot. Whereas on a day like this, where you've got a 60% win rate and the potential for 16 times the amount at risk, if you just held everything to the highest, to that immediate extension point, I realize right away that those 17 points from that stop out maybe 3 times a day, it might sting at the time, but if I could achieve even one of these, that's overcoming all of that, So anyway, here we've got a calculated, just like a binary column that's saying whether or not you achieved 1-to-1 risk reward. And again, that's not necessarily that important, but you can see that there are times where the trade paid off. It hit 10 points, but it didn't reach 1-to-1. So the maximum favorable excursion did not overcome how much we risked. And so, if that's important to you, you could go into the charts and take some notes on those trades and see what happened. Then here's your max R per trade. So again, if you would have held this all the way to the MFE of that initial extension, you would have gotten 8.5 Rs. Whereas you can see the most we can risk is 1 risk unit, of course, because that's how we're figuring out what a risk unit is. And then this should add up your total R's for the day. Yeah, so you've got 158, and then you lost an R, so now you're down 58. But if you see here, on a day like this, you actually if you did it right, you took stops, but you never went red, which is crazy, right? Now, if you want to add some more information here, I've left location here. I know the way we should be doing it is choosing our trades based not only on the algo, but also on location. So, for instance, if you want to say that, sorry, my cat's playing in the hallway. If you want to say that you were trapping off the wave to the high or the wave to the low, or at an LVN, or at the previous day's VPOC, right, or an anomaly. I've just got a bunch of different things that you might, reasons why you might want to note where you were. It's probably in there. Again, if it's not, you can add it just by going to data and data validation, and you can just, whatever you need in here, just add it. But I've got pretty much everything I could think of, including NA, which I don't know, or not a location at all. Then this is just calculating how many wins you've taken in the day. So you can see here you've taken 6 wins, and then you can look over here and you could count your number. You've got your number of trades on the left. So 10 trades and 6 wins. So 6 for 10, 60%. Then here I've got a space for notes. So here I said this was minutes after the open. You can see that trade is the one we just talked about right here, right? So the open was here. You would have had to be willing to trade minutes after the open. So I'm going to put it down in the trade log, but I'm also going to note that because normally I wait 30 minutes. So the next trade, it was a stop. It happened at 8:57. My notes were the trap occurred across the chasm to the high of day. So we put in a high of day. Let me make this bigger. We put in a high of day in the morning, and then after the high of day, we broke under a power bar or an apex to the downside, and then trapped back into it. See that? But the apex occurred, the bullish apex that we trapped back into occurred, it was the wave to the high. See that? That's the high, and this is the wave to the high. Well, technically the wave to the high is all the way back here, but it's the apex prior to the high. So it came down, snuck underneath it, and then tried to trap back in again. And so if you want to know whether or not that's a trade that works regularly or not, and if you have like questionable confidence about it, well, make note of that and then go back and see if those are consistent stops or not, right? And that's why there's a note there. And then the next one, trapped across the chasm to high of day and only two waves. So another thing we've learned is that after getting a big impulse move like this, particularly when you're going down, this one here, this was not much of an impulse move, but let's say this was, that you should usually wait for 1, 2, 3 waves before you anticipate fighting that impulse move. Now this one after the 2 waves here did work, and the reason for that is this really wasn't much of an impulse move, right? It was just a push off the high that went under the wave to the high and then trap back in. So another note here on this second trade, or no, sorry, this is trade number 3, is that it went across the chasm to the high of day, and that this is, I could say that this is also under the wave to the low, right? Trapped under, so that might be another important, that might be even more better than only 2 waves, because like I said, it wasn't really an impulse wave. So trapped on low of wave to the low, right? Like that, maybe that's something you want to find. So then the third one is the 902, 912. So this is 902, 912 is next. So right here. So this one was the head and shoulders, so inverse head and shoulders trap. So there's a left shoulder here, and then a head, and then a right shoulder here. And so you can see that the entry is this star bar, and it trapped back into the range of the left shoulder apex, right? It didn't trap under the head, it trapped back into this one. Those, if you see them, they work, and as long as it's bullish, it can work, right? And this one definitely worked. Then, so I marked that because that's, I'd like to know, like, how often do those work, right? Well, note them down. Today they definitely worked. And then this one shorted, or not shorted, it stopped, and it was a trap across the chasm. So that was, let's look at that one. 9:48. Couldn't find the time. Okay, 9:48, right here. So this is the next entry that's a trap, and you can see that the apex is way back here, right? And the entry would be here. You've only got 1, 2 waves here, so if you think if you thought it was bearish, you shouldn't be fighting it. And the question, the only reason to take this would be that you think it's still bullish, or you think it's balanced, or you just don't care because you think you're going to get 10 points often enough, and that's okay too, right? But you are going all the way across this big gap here, which I call the chasm. So that one stopped, right? Then there really are only a few more. We might as well just do the rest. Let's see. So then we have 9:48, 9:58. Across, is that this one? 9:58. Right here. Trapping on this one. Okay, so 2 waves down only. But again, not really impulse waves. That one gives us a nice little scalp. And then the bread and butter trade was 1, 2, 3 waves the trap was to the right of the high of day, and the entry is on a POC over POC, making it likely that it's gonna, if we trapped any shorts down here, that it could immediately cause quite a stir, right? And so the extension here is, I mean, I don't remember how far I decided to go, but I mean, you know, whatever you think is reasonable that you might have held it is what you want. I mean, technically went all the way to 11,775, right? Now these didn't trap, so the next one wasn't until, yeah, 11,725 is what I said. So I didn't even take it to the whole way. Okay. The next one is 1252. 12? Oh, right here. So, now once again, new high of day, you are trapping on an apex to the left of it, and you've broken a bullish apex below. Now we have not gotten an orthodox close below it, but we did put a POC below it on a bar that's not purple, which is usually all you need. Now you might still get 10 points, right? But you got to realize if you're taking this trap, it's probably time to stop being bullish. But if you don't see it, it's okay, because it's still going to get you 10 points a lot, right? But that trap is not as good as this one, where they're so close together, and there's not a high a day up here. We're at support, right? We had not trapped right here. If you think about it, potentially there are buyers trapped up here, and then you're buying right into where they bought. So, and then again, but it still gave us what did I say, 10? I think it was, no, I think it was 10, but not 15. So yeah, it did not give us 1-to-1 risk reward, but it did get us 10 points. So, and then the very last one was 1346. 1346, right here. And that one worked. Oh, I missed this one. This one was a stop. How did I miss this one? There's one more stop in here. I must have missed this. There's a stop at 1337 is a stop. 13, this entry right here. So it's trapping off of the green one. So if you're trading into the close, which, you know, it's not something you can't do, but sometimes it's harder. This one fails. That's just a straight up stop. But then this one works. It sets up again and gets you at least 10. Right? And then it's the close, and there's nothing else to do. So yes, there was just a few trades, but you can, here I'll show you the, I don't want to make this too long, but I'll show you that. So on ES, there's only 4 trades. So let's say that you make a copy, and you have a day where you have 10 trades, but there's only 4 here. What you want to do is select any of these, and then Control C for copy, and then just hit the down arrow and hit Control V right away, and it'll just copy everything right in place, and it won't mess with the formatting. The thing to know though is that your last trade that you want it to calculate needs to be the last trade here. If you put zeros in here, it's not gonna like that, right? You can't have zeros anywhere, and it will mess up this if you copy your trades and don't change the data, right? Because now it looks like each one of these is individual trades, but they're actually all the same. So if you had 10 trades, what you would need to do is then, you know, copy and paste these new rows, but then go in and change this to, you know, 1301, and then put in the entry and the stop. Make sure you actually put in that data. Otherwise, it won't be right? So you got to make sure that all of the trades that are listed here are actual trades and not copies of trades. Otherwise, these numbers will be wrong, like that, right? Like it looks like we only have a 30% win rate, which isn't right. In reality, these are all the same trade, right? And so when you take them out, you can see that in reality, ES had a 75% win rate. So it's a pretty big difference if you accidentally leave a copied trade down here, it's going to mess with your numbers. So don't leave it there. But if you need to make more, you don't want to just put in numbers here because you won't have the formula correct. So the first thing you got to do is Control C. Whoops, and then don't do that. I hit page down. So page up, home I think will work. Nope. I have to scroll all the way back up. That's annoying. Okay, don't hit page down on your keyboard. Okay, so once you've copied it, go down here and hit Control V. And again, like you can, as long as it's down in this first row, the A row, the A column, it'll populate all the rest. And then for deleting them, select the whole thing and then just hit delete. Don't right click delete rows. Don't mess with that. Just hit the delete button on your keyboard. Now, like I said, if you mess it up, it's no big deal, right? Just go back to the link and download a new copy of it. And if that's not working, tell me and I'll get you a new copy. That should pretty much do it, you guys. If you have any questions about how to use it, or if there's something that you feel like is missing that you'd like to be on here, let me know. And yeah, we're going to try to do this regularly so that we have a running total of, at least for like the Apex straps or whatever trade is like the one that most people are running. We're going to try to keep a running total of them so that we can, have that data. I think that's helpful. So hope this has been useful, and I will see all you guys soon.